Decided to cut interest rates to a new record low of 0.15%. That's good news for some. Well, our finance correspondent Brian O'Donovan is here to explain what it means for mortgage holders and the economy. Brian.
Well, Colette, this is the 7th rate cut in the last 6 years. And if you look at this graph, you can see just how dramatic the fall has been. In July 2008, the key ECB rate stood at 4.25%. Today it's down to just 0.15%. Today's cut means depositors may now get less for their savings, and variable rate mortgage customers could be hit with increases to cover the bank's losses. The big winners here, however, are the country's 375,000 tracker mortgage holders.
If you have a tracker mortgage, for every 100,000 you've borrowed, you'll see a reduction of about €5. That means that a typical mortgage of about 200,000 is going to be a tenner better off per month. It's not that big of a deal, but still, every little bit helps.
Now, the European Central Bank didn't cut rates today just to help mortgage holders. It was done to stimulate the Eurozone economy. ECB President Mario Draghi also announced negative deposit rates, which means banks will have to pay to keep their money at the European Central Bank. This should encourage them to lend more into the economy. Additional long-term funding for banks was also unveiled, with the ECB President promising to take more action in the future if needed.
The recovery is low, as I've said many times. It's fragile, it's uneven, but it's there. And we've also observed that the labor market has shown signs of stabilization. The unemployment rate in particular has stabilized and also has shown some signs of going down.
Now, initially, after today's ECB announcement, stock markets rallied, but some of the euphoria has faded this evening, with investors questioning if Mario Draghi should have done more to boost the Eurozone economy. Colette.
Thanks indeed, Brian. A woman who helped to dispose of her husband's